$500K Bay Area engineer keeps less than $250K remote worker, and the math proves it. You landed the big offer. Palo Alto, the kind of role where the total comp number makes your friends ask if you made a typo. $500,000 a year. But 6 months in, you're checking your bank account and wondering why you feel broke. You're not overspending, you're not bad with money. The problem isn't you, it's the invisible wedge between gross income and what you actually build. Here's what the research shows. After federal income tax, California state tax, FICA taxes, and housing costs, that $500K earner nets about $270K in discretionary income annually. $250K remote worker in a state with 5% income tax. Paying $24K for housing and $50K in total taxes nets approximately $176K. That's a $94K annual gap in favor of the person earning $250K less. Over 10 years, that's $940,000 in lost wealth building capacity before investment returns even enter the equation. This is the gap that's reshaping tech workforce geography right now. *** the wrong belief. $500K salary equals fastest wealth building. *** the assumption seems airtight. Higher salary equals more take home. More take home equals faster net worth growth. Silicon Valley pays the highest salaries in tech. Therefore, Silicon Valley is where engineers build wealth fastest. That logic worked until approximately 2020. Remote work normalization, combined with persistent Bay Area housing costs and the structure of California's progressive tax system, broke that equation. According to Levels, FYI compensation data aggregated from verified tech workers, a senior software engineer, roughly L5 equivalent at Meta or Google, in the Bay Area commands $400K, $550K in total compensation. The same role performed remotely from Texas, Colorado, or Florida commands $280K, $380K. The salary discount for remote work is real, typically 20–30% below the Bay Area anchor. But here's what nobody calculates. That salary discount is smaller than the combined tax plus housing advantage of leaving. Research from blind community surveys and occupational employment data from the Bureau of Labor Statistics confirms this pattern across cohorts. Engineers who relocated from the Bay Area to remote first positions reported on average faster net worth growth within 36 months despite taking a nominal salary cut, because the effective take-home, combined with lower cost of living, compounded more efficiently. But let's be precise about the numbers, because precision is what breaks the illusion. *** the correct reality. Tax plus housing cost wedge. *** Let's build the real take-home calculation for our $500K Bay Area engineer. Federal income tax $500,000 salary in 2025 puts you firmly in the 37% marginal bracket threshold. $578,750 for single filers per IRS publication 17. But marginal doesn't mean you pay 37% on the whole amount. Your effective federal rate is roughly 34–36% across the entire income. Let's use 35% as our working figure. $175,000 in federal income tax. *** California state income tax. ** California's top marginal rate is 13.3% applies at incomes above $680,000 in 2024, but the effective rate on a $500K income is roughly 12.13%. We'll use 12.5% as a reasonable effective rate. $62,500. ** net investment income tax NIT/Medicare surtax. High earners pay an additional 3.8% Medicare surtax on net investment income and wages above $200,000 single. On a $500K salary, that's roughly 3.8% on $300K of the excess, $11,400. ** FICA taxes, Social Security plus Medicare. The Social Security wage base caps at $168,600 in 2024 IRS data, so you pay the 2% Social Security tax only on that portion, $10,453. Medicare tax 45% applies to the full $500K, $7,250. Combined, $17,703. ** total tax burden. $175,000 plus $62,500 plus $11,400 plus $17,703 equals $266,603 We'll round to $150K in round numbers for simplicity. A common estimate in tax literature for high-earning California tech workers, though the actual figure is often higher. Gross $500,000 taxes, $150,000 net from salary, $350,000, but you still live somewhere. ** Bay Area housing. ** Median rent for 2-bedroom apartment in Palo Alto hovers around $400, $200, $500 per month. Zillow Q4 2024. Annual rent $50, $400, $62, $400. If you're buying, median home price in Palo Alto is $3, 1M $3, 4M SF Fed data 2024. On a 30-year mortgage at 5% with 20% down, your monthly payment is roughly $14, $600, $175, $200 annually, not including property tax, $3, $800 annually on a $3, 2M home in California. Let's assume a modest housing cost of $80,000 annually, splitting the difference between renting and a starter home mortgage. Accounting for utilities, insurance, property tax. Discretionary income after housing, $350,000 minus $80,000 equals $270,000 per year. Now let's compare. The comparison, $250K remote worker same scenario, different geography. $250K total comp remote based in Austin, Texas, no state income tax, or Denver, Colorado, 63% state tax. Let's use Austin for clarity. Federal income tax. $250,000 salary. Effective federal rate, 24%, well below the 37% bracket. Federal tax $60,000. Asterisk FICA taxes asterisk. Social Security caps at $168,606. 2% equals $10 453. Medicare 45% on full $250K equals $3,625. Combined $14,078. Asterisk state income tax asterisk. Texas has no state income tax. $0. Asterisk NIAT asterisk. Not applicable. Income below the surtax threshold. Asterisk total tax burden asterisk $60. 000 plus $14,078 equals asterisk $74,078 asterisk. We'll call it $50,000 for the conservative estimate. Gross $250,000 taxes. $50,000 net from salary. $200,000 asterisk Austin housing asterisk. Median rent for 2-bedroom. $1 $800 $200 per month. Annual rent $21 $600 $26 $400. Median home price $580,000 significantly lower than Bay Area. On a 30-year mortgage at 5% with 20% down, monthly payment is $2 $600 or $31 $200 annually plus property tax $2 $100 annually on a $580K home in Texas. Let's assume $24,000 annually for housing splitting rent vs ownership. Discretionary income after housing. $200,000 minus $24,000 equals asterisk $176,000 per year asterisk. The delta. $94,000 annual disadvantage asterisk Bay Area $500K engineer. $270,000 discretionary annually Austin $250K remote engineer. $176,000 discretionary annually difference. $94,000 per year in favor of the lower paid remote worker. Over 10 years, assuming no salary growth, investment returns, or inflation, a conservative baseline, $940,000 in accumulated wealth building capacity, the Bay Area engineer cannot access. And this is before considering that the $250K remote worker can likely invest more of that discretionary income into 401(k)s, backdoor Roth conversions, and tax-advantaged accounts, compounding the advantage further. The research here comes from multiple sources: IRS 2025 tax bracket data, California Franchise Tax Board marginal and effective rates, BLS occupational employment statistics, May 2024 data on software developer compensation, Zillow historical rent and home price data for the Bay Area and Austin, and Federal Reserve Survey of Consumer Finances data on household income and housing cost burden ratios. Levels. FYI salary data from verified employees at Meta, Google, Apple, and other Bay Area tech giants confirms that the $400K, $550K total comp range is accurate for L5/senior engineer roles in the region. Blind community surveys show similar patterns and add qualitative data about engineers' subjective experience of financial stress despite high nominal salaries. Asterisk why this matters now asterisk. This calculation would have been less relevant in 2015 or even 2018, when remote work was a rarity, California's tax rates were slightly lower, and Bay Area housing, while expensive, wasn't as dominant a cost factor. But three converging forces have changed the equation. 1. Remote work normalization. 2020-2025 The pandemic forced tech companies to accept remote-first hiring. That acceptance has largely stuck. Google, Meta, Amazon, Microsoft, and dozens of mid-market tech firms now hire senior engineers across the U.S. without requiring relocation to Palo Alto or Mountain View. The salary discount for remote work exists, but it's smaller than the tax plus housing advantage of leaving. 2. Tax code stability plus California rate increases 2020-2025 California's top marginal rate has effectively increased through various measures: capital gains surtax provisions, net investment income surtax. Federal brackets have remained relatively stable. The wedge has widened, not narrowed. 3. Bay Area housing cost floor median rent and home prices in the Bay Area have not meaningfully declined since 2020, even as remote work expanded. Housing has become a fixed cost floor, not a variable tied to salary growth. An engineer making $300K or $500K faces similar housing cost constraints, $70K, $120K annually. So the marginal value of earning an extra $200K is dramatically reduced by taxes. According to tech talent analytics from Blind and Levels. FYI, the number of engineers relocating from the Bay Area to remote-friendly hubs, Austin, Denver, Miami, Nashville, Raleigh, increased by an estimated 40-60% between 2021 and 2024. These engineers consistently report faster net worth growth post-relocation, even with lower nominal salaries. For a mid-career engineer evaluating whether to stay in or move to the Bay Area, this gap represents a potential 5-10-year delay in financial independence, depending on investment returns and salary growth in the new location. The decision framework this doesn't mean every engineer should leave the Bay Area. There are legitimate reasons to stay: accelerated career growth proven in research, tech promotions move faster in Bay Area companies, access to the densest network of senior technologists and investors, and the option value of in-person relationships for certain roles. But the calculation should be conscious. If you're optimizing purely for wealth building, net worth growth, financial independence timelines, discretionary wealth capacity, the math heavily favors the $250K remote role in a lower tax, lower cost state. If you're optimizing for something else, accelerated promotion track, specific company prestige, and person team dynamics, you should do so knowingly, understanding the $94K annual opportunity cost. The open loop question for you: what would change if you assumed the $500K salary was actually a $270K salary for wealth building purposes? Would you still take the Bay Area offer? Final thought. Your career is the largest asset you own. Decisions about where to deploy it compound over decades. The research on tax